All right, to the JSE now. Well, the local market swung back into the positive today after yesterday's plunge. The all-share closing just under 0.25% in the green. You had mining and resource stocks which offset sliding heavyweights, Naspers and Process. They were higher, the mining stocks. Makwe Masilela of Makwe Fund Managers joins us. Makwe, thanks indeed for your time. Now, there was this huge anxiety over Russia's potential invasion of the Ukraine. We saw what happened yesterday with that tension in the area. Investors held back. But today, the all-share had a bit of a turnaround. We had a great bounce back by the mining and resource stocks. How did you read what happened today?
Good day to you, Devil, and to the viewers. It's more of what we've seen yesterday, a rare reversal in the U.S. stocks. Remember, markets have been, or investors, growing anxious about how rapidly the U.S. Federal Reserve will increase interest rates. And also are focusing on that conflict when it comes to Russia and Ukraine, because we've also seen that the U.S. deployed almost 8,500 soldiers, so along those borders, in case it gets to a point where they have to go on war. But we have to bear in mind that all that kind of reversal, which helped our opening this morning, it was more of the retail punters who bought into the dips in the U.S. markets yesterday, and also what we call option-related flows. Hence, we opened firmly up, but during the session, we continued to losing those gains. And as you said, we just closed marginally up. So all those fears, all those worries are still there, which is the U.S. interest rates, because the meeting started today, finishing tomorrow, and also the conflict between Russia and Ukraine.
All right, we'll talk about what's happening with our interest rates in a moment, but let me get this from you. Not much company news, Makwe, but Cashbuild releasing a somewhat disappointing trading update here. Now, the reason why we like to talk about this is because Cashbuild is an economic indicator of sorts, isn't it? It tells us whether people are back at building the economy. What's your take on what Cashbuild said today?
I guess it was expected. To be honest, Devin, we cannot continue to improve our homes. So we've done that. We've supported Cashbuild. Now all is done and dusted. Hence, we see the guys, we know that they had almost 36 of their stores looted. But if you exclude those 36 stores, you look at their revenues, they were down 5% for the second quarter. And if you look at the first and second quarter, it tells you that for the half year, revenue is still down 5%. And also what is worrisome, you look at the transactions that went through the tills. They decreased by a whopping 18%, which is a concern. And we know that out of those 36 stores, 29 thereof have reopened.
Let's get back to that interest rate decision very quickly, Makwe. So, around about December, after the Reserve Bank hiked interest rates in November, you had some analysts say, well, maybe they will skip an MPC meeting and increase rates again in the second meeting. But increasingly now, analysts are saying we could see an interest rate hike come this Thursday. What's your take on it?
Our take that we wish they skip this meeting, but chances are they will increase, because you look at our latest print when it comes to inflation, up 5.9%. The Reserve Bank target is anything between 3 and 6%. The US is looking to increase interest rates around March. And we also have to make sure that we increase, because we don't want to be behind the curve, because we also need to maintain that interest rate differential between us and the US.
All right, so a bit of a difference come the end of the month for your bond and car repayments. All right, thanks very much indeed. Makwe Masilela from Makwe Fund Managers.